This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
We covered audit reports very extensively in an earlier chapter because I thought it was worthwhile, having introduced the idea of an audit, really to see where the final outcome was going to be, what the purpose of all the collecting of evidence and the investigation of internal controls was aimed at. And it is aimed at being able to sign an audit report. And we're just going to revisit this very, very briefly, just to remind you to go back and have a look at that chapter. And remember, when you're signing an audit report or you're contemplating what sort of audit report to give, the variety of audit reports which actually exist. And first of all, you can have an unmodified audit report and opinion. Remember, the opinion paragraph was just a small bit of this big audit report. This is the report, or the opinion, which says the financial statements show a true and fair view. No ifs, no buts, no additional bits and pieces of information in there. It's the plainest, simplest form of audit report and audit opinion. And then we had modified reports, and if you remember, a modified report was a slightly sloppy way of saying a changed report. The term modified report doesn't really have official recognition, but we changed the report away from this unmodified report and opinion. And the first type of modification of the report, going down the left hand side here, were matters that do not affect the auditor's opinion. In other words, the auditor is still going to say the financial statements show a true and fair view, but then after that you can put an emphasis of matter paragraph which says, by the way, go and look at note 42, because this is telling you something about maybe the factory which burnt down shortly after year end, or maybe the going concern issues about the company. So the amount, the item, if you like, has been properly disclosed in the notes. We're simply frightened that the members of the company are going to overlook it. So this is like a big red flag waving at people saying, go and look at this, because this could be really useful to your understanding of the company's financial position. We also had other matters, and the other matters were say the director's report said something which was contradictory to what was in the financial statements. The financial statements we believe are correct, so the director's report is wrong. We can't do a qualification because the audit report doesn't cover director's reports, but nevertheless we draw people's attention to it in the audit report. The other types of modification are modified opinions. This is where we are not simply saying the financial statements give a true and fair view, end of story. We have found a problem in the financial statements, or we have been unable to gather sufficient appropriate audit evidence. And we're going to change our opinion away from that very straightforward, simple one. So we go down here if they contain a material misstatement, in other words, there's something materially wrong in the financial statements, or we haven't got sufficient appropriate audit evidence. First of all, the problem has to be material. If there's not material errors or material absence in our information, you wouldn't think of going down a modified opinion. So once you have passed the materiality kind of test, then you say, I have to tell people something about this in the audit report. If it's, if you like, what I would call moderate materiality, and you can isolate the problem to kind of one figure, then you would say, except for the fact that we think inventory is overvalued by $50,000, the financial statements give a true and fair view. Or except for the fact that we were able to count the inventory shown in the balance sheet at $50,000, we think the financial statements show a true and fair view. If the problem or the absence of information is really serious, then the problem becomes pervasive. It kind of almost touches or affects everything in the financial statements. Essentially, the financial statements are a waste of paper. And the auditors will either issue an adverse opinion the financial statements do not show a true and fair view, and explain why, or they will issue a disclaimer of opinion. We are unable to form an opinion, and the basis of opinion paragraphs coming just above the opinion paragraphs will give all the details about that.